Michael Saylor is back. Last time he was on CNBC, he predicted Bitcoin could hit $150,000 by the end of the year. Today, with Bitcoin trading around $95,000, his tune hasn't changed. But his perspective has become more measured. Saylor begins with a reality check. Bitcoin is volatile. Over the past 5 years, it's experienced multiple sharp drawdowns, some of which would make even seasoned investors nervous. But if you look at the average annual growth, Bitcoin has risen about 50% per year. Compare that to gold or the S&P 500, which average closer to 14%. The message is clear. Volatility is part of the game, but the long-term gains have been extraordinary. He points out that strategy, his company, has delivered returns comparable to the top-performing tech stocks over 5 years. It's up 71%, matching the performance of companies like Nvidia. Saylor uses this to illustrate a broader principle. High returns require patience and a tolerance for swings. If you want the upside, you have to accept the risk. For individual investors, his advice is simple: think in 4-year blocks. Bitcoin should be treated as a long-term investment. Short-term price swings are inevitable, but over time, the asset tends to appreciate. If you can hold and ride out the volatility, the long-term trajectory is compelling. Looking at Bitcoin's current price, Saylor believes the market has established a strong base of support. Many early holders sold near $100,000, removing leverage from the system and creating a more stable foundation. This, he says, is an important factor for future growth. While forecasting the short-term price is difficult, the underlying story of Bitcoin remains intact. It's digital capital that will outperform traditional assets over time. If you're enjoying this video, hit subscribe, leave a like, and drop a comment. It really helps. Strategy itself is structured conservatively. The company is lightly leveraged, less than 1.15 times. Even in a severe downturn, Saylor emphasizes that the balance sheet remains stable. There are no looming triggers or defaults to worry about. The point is to participate in the upside while protecting the company and its shareholders from extreme risk. Some have suggested that stablecoins could challenge Bitcoin by taking over some of its transactional utility. Saylor disagrees. He views Bitcoin as digital gold, a store of value, a piece of the global digital economy. Stablecoins, tokenized securities, and other proof-of-stake networks serve different purposes. They are focused on transactions, lending, and decentralized finance. Bitcoin, by contrast, is a foundation, a core asset that long-term investors hold for wealth preservation and growth. Buying Bitcoin isn't occasional for Saylor. Strategy is continually acquiring more. The company now owns about 3.1% of the entire network, with an average cost of around $74,000 per coin. The approach is disciplined. Don't try to time the market, accumulate steadily and hold. Over the long term, consistent accumulation is more powerful than trying to predict every peak and trough. Saylor also clarifies how different investment vehicles fit into the digital economy. Bitcoin itself is for long-term investors seeking digital capital without relying on banks or counterparties. Strategy stock is for those looking to amplify returns through exposure to digital credit. And digital credit instruments provide a way for shorter-term investors to participate without being subject to Bitcoin's wild price swings. Each serves a distinct purpose depending on your investment horizon and risk tolerance. The takeaway from Saylor's interview is that Bitcoin is not about quick profits. It's about participating in a fundamentally new asset class, digital capital that continues to grow. Strategy isn't speculating, it's accumulating steadily and methodically. Volatility is expected, but the long-term story is compelling. Saylor sees digital capital as the future of wealth, and he's putting his money where his convictions are. In a world of financial uncertainty, Saylor's message is straightforward. Think long-term, accept volatility, and focus on the emerging digital economy. Bitcoin is no longer just a trade or a speculative asset. It is a position in the future of money, and for those with patience and vision, it offers the opportunity to participate in something much bigger than short-term market fluctuations. If you made it to the end of this video, type Bitcoin in the comments to show you're awake. And don't forget to subscribe to stay part of the revolution.